Welcome to Credit Score One-on-One. Everything you need to know. In this video, we will be going over the ins and outs of credit scores, how they're calculated, and how to improve them. A credit score is a numerical rating that represents an individual's creditworthiness, and it is important to understand how it works to make informed financial decisions. We'll be covering everything you need to know to take control of your credit score and use it to your advantage. What is a credit score? A three-digit figure known as a credit score is calculated using data from your credit report. Your creditworthiness is analyzed using this information by lenders, renters, insurance providers, and even some employers. The FICO score, which ranges from 300 to 850, is the most widely used credit rating model. The higher your score, the better your credit is considered to be. A credit report is a detailed record of your credit history, including information about credit accounts you have had, whether you have made payments on time, and any negative information such as bankruptcies or foreclosures. Credit reporting agencies such as Experian, Equifax, and TransUnion collect this information and use it to create your credit report. It is important to review your credit report regularly and to dispute any inaccuracies you find. Your credit score and credit report are not the same thing and should not be confused. Your credit score, which is a summary of the data in your credit report, is used to estimate your likelihood of making timely loan payments. On the other hand, a credit report is a detailed record of your credit history that holds information on your credit accounts, payment history, and any negative information. How is a credit score calculated? A credit score is calculated using a complex algorithm that takes into account a variety of factors from your credit report. The most important factors that are considered include payment history, 35%. Whether you have paid payments on time, how frequently you have missed payments, and any bankruptcies or foreclosures are all included in this. It's crucial to ensure that you're paying your bills on time because late payments can significantly lower your credit score. It's critical to make timely payments because even one missed payment can harm your credit. Credit utilization, 30%. The percentage of credit that you are utilizing in relation to the total amount that is available to you is called credit utilization. The lower your credit utilization, the better it is for your score. Maintaining a credit usage rate under 30% is recommended. This implies that you should aim to maintain the debt on a credit card with a $1,000 credit limit below $300. This demonstrates to creditors your ability to carefully manage your credit. Length of credit history, 15%. A longer credit history is considered to be more favorable, so it's a good idea to keep old credit accounts open. The length of your credit history is determined by the age of your oldest credit account and the average age of all your credit accounts. A longer credit history is considered more favorable because it shows lenders that you have a long history of managing credit responsibly. Credit mix, 10%. This is the mix of credit accounts you have, including credit cards, mortgages, and car loans. Having a diverse mix of credit accounts can be beneficial for your score. A diverse mix of credit accounts shows lenders that you have experience managing different types of credit, which can be viewed as more favorable. New credit, 10%. This includes the number of new credit accounts you have opened recently and the number of hard inquiries on your credit report. Hard inquiries occur when a lender or creditor checks your credit report when you apply for credit. While a hard inquiry is not typically harmful on its own, having multiple hard inquiries in a short time can negatively impact your score. This is because having multiple hard inquiries can indicate to lenders that you are applying for credit frequently, which may be viewed as a sign of financial stress. It's important to note that while these are the main factors that are considered when calculating your credit score, different scoring models may weigh these factors differently. Additionally, some scoring models may consider other factors such as your income or employment status. What is a good credit score? Depending on the scoring model used, a credit score of 700 or higher is generally good. A 750 or higher is considered excellent. A 600 or below score is regarded as poor. It is important to remember that these are only general recommendations and that each lender may have a different minimum credit score requirement. Additionally, the credit score requirements for various loans or credit cards may vary depending on the lender. For instance, a mortgage lender can have stricter credit requirements than a credit card company. How to improve your credit score? Here are a few things you can do to improve your credit score. Make sure you're paying your bills on time. Late payments can have a significant impact on your score, so it's important to make sure you're paying your bills on time. Keep your credit card balances low. High credit card balances can negatively impact your score, so it's a good idea to keep them as low as possible. Don't open too many new credit accounts at once. Opening too many new credit accounts in a short period can indicate to lenders that you may overextend yourself financially and can negatively impact your score. Don't close old credit accounts. Closing old credit accounts can shorten your credit history, which can negatively impact your score. Check your credit report for errors and dispute any that you find. You are entitled to one free credit report from each of the 3 credit reporting agencies per year. Review your report for any errors and dispute any inaccuracies. Consider a credit builder loan. These loans are made for people who have bad credit or no credit history. Normally, they are small loans with low interest rates that call for regular payments. You can build a credit history and raise your credit score with the help of these loans. Keep your old credit accounts active. Even if you're not using them, keeping old credit accounts active can help improve your score by lengthening your credit history. Be mindful of hard inquiries. Every time a lender or creditor checks your credit report, it results in a hard inquiry. While hard inquiries are not typically harmful on their own, multiple hard inquiries in a short period of time can negatively impact your score. Consider a secured credit card. A secured credit card is a type of credit card that requires a cash deposit as collateral. As it enables you to build credit while lowering the risk to the lender, this might be a useful alternative for people with no credit history or bad credit. Be patient. Improving your credit score takes time and effort. Be consistent in making on-time payments, keeping credit card balances low, and avoiding hard inquiries. It may take several months to see an improvement in your score. In conclusion, remember, your credit score is an important factor in your financial well-being, so it's important to stay on top of it. By understanding how your credit score is calculated, you can take steps to improve it and use it to your advantage. Whether you're looking to apply for a mortgage, a car loan, or a credit card, having a good credit score can help you qualify for better terms and lower interest rates. It's very important to check your credit report regularly and dispute any inaccuracies you find. This will help you stay on top of your credit score and ensure that it is an accurate reflection of your credit history. And remember, it is important to be patient. Credit improvement takes time and consistent effort. Please feel free to leave a comment or questions below. Thank you for watching. We hope this video has given you a better understanding of credit scores in general and how to improve them. By taking control of your credit score, you'll be better able to make wise financial decisions and reach your financial goals. Remember to hit the like button, share our video with your friends and family, and don't forget to subscribe to our channel to stay up to date on all of our latest content.